Let's now give you a sense of the very latest in the world of business. The exchange looks set to open to a mixed global markets this morning, while the rand steadies after approaching the 16 rand dollar yesterday. For a sense of how the markets have fared so far in early trade, we're joined now by Chief Investment Officer and founder at Makwe Fund Managers, Makwe Masilela. Makwe, very good morning to you. Thank you so much for joining us. Give us a sense of how the markets have opened and an update perhaps on the rands moved. Are we still within a touching distance of the 16 rand against the US dollar mark?
Morning, important to the viewers. Yes, the market opened up nicely, 0.4%, and that's in line with international markets. That's after closing down 0.6%, and the JSE has been led by industrials. And I think it's a question of we feel that the fall that we've been seeing for the past few days is overdone, hence the market is up. And when it comes to the rand, it continues to be at the mercy of what is happening with the US dollar. Yesterday night, we got the minutes from the Federal Reserve showing us that in their meeting, some of the guys are happy to start tapering much faster, and as a result increasing interest rates much faster. As a result, other people were thinking that we might even have 2 interest rate hikes next year, but I think that's too aggressive. We'll still expect to have 1 mid next year. So that itself is helping the dollar to continue to be strong, and that gets to be very unfortunate for the rand itself. Hence we see it flirting with the 16 to the dollar. So, and chances are, even though much this morning is a bit steady, but going forward, I think it just looks that the rand might continue to weaken because of the better US dollar.
Now, the Government Employees Pension Fund is set to cut the amount of money it allocates to a PIC unit. Let's talk about some of these developments and perhaps the significance of this move.
I think it's very critical because if you look at the commission that we had, basically it was looking at that part, Sibaya Fund, people were not too concerned about the listed part of investments when it comes to the PIC money. And so far we've seen that there are so many transactions that people were not too happy the way they were done, the investment decisions thereof. So now as a result, the mandate, which was anyway coming to lapse by March, the guys just let it lapse. They didn't renew it, and they're busy trying to negotiate one which might take a year. But that's a very important mandate because it looks at helping BEE guys. It helps at getting investments in your infrastructure project. It also helps into getting investments in the environment. So I think they should speed up that whole new mandate. But yes, they have to enforce new regulations to make sure that it's done in a proper way. Not only people who are politically connected are able to get funding from that kind of things, but it continues to play a very important role, not just on the BE part of things, but also on the ESG kind of investments.
Mr. Price has since released its interim results. Let's talk about some of those numbers and perhaps whether or not Black Friday will move the needle at all when it comes to sales.
Hopefully it will, but we've seen the guys have done well. Remember reporting during the period where, number one, they had some unrest which led to almost 111 of their stores being closed. In a period where we had load shedding, in a period where they had to deal with the third wave when it comes to COVID-19, and also in a period where we've got global supply chain disruptions, the guys managed to increase their sales by almost 37%, and they also managed to increase their market share by 210 basis points. And you look at their online sales, they almost doubled, now contributing almost 2.9% to the retail sales, and the cash sales themselves up to 8%, and those cash sales makes up almost 85% of the group retail sales. So I think the guys continue to do well. Profits as headline earnings per share up 34%, dividends as well increased by almost 34%. So yes, they stand to benefit going forward.
And very lastly, Makwe, before we let you go, Tsogo Gaming also publishing its interim financial statements. How has that group fared in the period under review?
Not too badly. We know they're still struggling. Remember, the guys between the 28th of June and 25th of July, they had to close completely because of the third wave. We've seen them, their income is up almost 144%, but that's still 36% below the pre-COVID levels. We've seen their operating expense or cost going up by 85%. And also when you look at their adjusted EBITDA, it's up almost 723%, but that's still 35% below what the pre-COVID levels. But their profits as headline earnings per share, we see that they're up 159%, and I think they did well by reducing their net interest bearing debt, which also includes the guarantees, by 13%.
Very well. Thank you so much for your time, Makwe Masilela there of Makwe Fund Managers, giving us a sense of how the markets have fared, of course, in the very latest in the world of business.